Welcome to The Deep Dive, the show where we take the source material, the earning calls, the presentations, and really cut through all the noise to give you the insights that matter.
And today, we are doing a major deep dive into Visa Inc.'s fiscal fourth quarter and full year 2025 earnings call.
It's a really interesting one to get into.
Oh, absolutely, because the market reaction was so quiet. I mean, Visa delivered a clean beat on everything, revenue, EPS, and the stock just kind of sat there.
Right. It was almost a non-event after hours.
Exactly. It signals what you'd call a bullish-leaning neutral setup. It was a good, sturdy print, but it wasn't, a jaw dropper.
And that quiet reaction, that sort of skepticism, is exactly what we need to unpack here. Our mission isn't just to go over the numbers. It's to really dissect the huge future vision management laid out.
Yeah, they're aggressively repositioning the company. They're investing so heavily in this Visa as a service model, or VAS.
And they see this as the only way to become a true payments hyperscaler.
That word hyperscaler, that was the central pillar of the whole call. It tells you they aren't just content being a big network.
No, they want to be the foundational, the operating system for global commerce.
Whether that commerce is happening on your phone or between two AIs.
Okay, so let's start with a quick snapshot, the financials that confirm their strength right now.
Go for it.
Revenue for the quarter hit a pretty solid $10.7 billion. That's a 12% jump year over year, and it easily beat the consensus estimates.
Right. And on the bottom line?
Non-GAAP earnings per share came in at $2.98. Beat consensus, but, just by a penny. So a squeaker.
Okay, but right at the top of the release, they signaled they're confident. I mean, that capital return announcement was immediate.
Yeah, the board approved a 14% increase in the quarterly dividend. It's going up to 0.67 cents.
A double-digit dividend hike while you're also planning these massive tech investments, that tells you management sees zero conflict between funding the future and rewarding shareholders today. It's a huge confidence signal.
Okay, let's go a layer deeper into the core engine of the business.
The volume metrics.
Right. Payments volume grew 9%. Processed transactions were up 10%. And for you, we should be clear, we're looking at these in constant currency, or cross-C.
Which is key. It filters out the noise from exchange rates so you can see the real health of the business.
And that focus is essential when you look at cross-border.
It is. If you strip out the generally slower intra-Europe transactions, cross-border volume was up 11%.
So still double digits.
Still very strong. Now, to be fair, that 11% is a bit of a deceleration from the red-hot prints we saw earlier in the year.
But 11% is still incredibly resilient.
In a world where the economic recovery is still pretty uneven, 11% is fantastic.
Okay, let's unpack this revenue beat, because it clearly didn't come from just simple volume growth. There was a big story in the non-traditional stream.
Oh, absolutely. You have to focus on two areas that just massively outperformed what anyone was expecting.
And those were
value-added services, VAS, and then commercial and money movement solutions, or CMS.
Okay, let's start with VAS. I mean, this segment was the big surprise. It grew an incredible 25% in constant dollars.
To hit $3 billion for the quarter, it's just phenomenal growth.
So what is actually driving that? What is in value-added services?
So think of VAS as the software and services layer that sits on top of the payment rails.
Okay.
It's their advanced fraud tools, the data analytics they sell to banks and merchants, their advisory services. When that side of the business grows at 25%, it shows they are getting deeply embedded into their partners' operations.
You make them stickier.
Way stickier. It's much harder to rip out Visa when you're also using their fraud and data platforms. They're selling intelligence.
And that momentum carried right over to the commercial side, which is so important for the whole B2B story.
Precisely. CMS grew 14% in constant currency. And within that, commercial payments volume was up 10%.
And that's all from new portfolio wins and B2B cross-border transactions.
Exactly. It shows the network isn't just for you buying coffee. It is the core infrastructure for global trade.
I think this leads us to the most important part for investors, which is the yield story.
The pricing power.
Huge pricing power. Data processing revenue grew 17%, while transaction volume only grew 10%. That 7-point gap is massive yield acceleration.
And management was very clear this was not an accident, this is strategy.
So what do they point to?
Two main things. First, the ongoing benefit of new pricing that they rolled out earlier in fiscal year 25.
Okay, so they raised prices and it stuck.
It stuck, which shows their leverage. And the second driver was a favorable mix shift. They saw more volume coming from higher-yielding cross-border regions, and they specifically called out an acceleration in Asia-Pacific.
So not only are they charging more, but the business they're getting is just naturally more profitable.
It is a double win on yield. It's a beautiful thing.
All this just seems to project total confidence, which brings me to the macro view. Were they seeing any of that choppiness or consumer weakness some of their competitors have been talking about?
No, actually, they went out of their way to counter that narrative. Their assumption for fiscal 26 is a resilient consumer and a stable macro environment.
And their data backs that up.
It does. U.S. spend was broad-based, credit and debit both up 8%, and they specifically noted their highest spend cardholders are still driving the fastest growth. So Visa's data is painting a picture of stability.
Which justifies all the forward investment we're about to talk about.
Exactly.
So what does this all mean for the fiscal 26 outlook?
Well, the full year guidance is for adjusted net revenue growth in the low double digits.
Okay, which is pretty much right where the street was expecting.
Almost perfectly in line. Around 11% nominal growth, so very similar to what they just put up in fiscal 25, just steady, high-quality growth.
And their investment strategy is reflected on the cost side too, right? Adjusted operating expense growth is also guided to be low double digits.
Yes, and that is such a powerful signal. They are intentionally aligning OPEX growth directly with revenue growth.
They aren't pulling back.
Not at all. They are spending money to win the future, which is the entire underpinning of this hyperscaler investment thesis.
One last thing on guidance, the quarterly cadence warning. This is pretty critical for anyone trying to model their performance.
Right. Management was very specific. They said Q1 of 26, the holiday quarter, is going to have the highest year-over-year revenue growth.
Because of the timing of those price hikes.
Exactly. And conversely, Q3 is expected to have the lowest growth rate because they're up against incredibly tough comps from the year prior.
So you have to bake that timing volatility into your models right now.
You absolutely do.
Okay, let's pivot. Let's get to the CEO's central theme. This massive investment across the VOS stack.
The Visa as a service stack.
He framed it as this multi-layered push foundation, services, solutions, and access all designed to make sure Visa stays the default trust layer in a, fragmenting payments world.
Yeah. And that foundation is literally being rebuilt from the ground up. They've started deploying the next-gen VisaNet.
This isn't just a patch.
No, it's a total overhaul. It's built on a cloud-ready, microservices, modular architecture. It's designed to be faster, more flexible, and ready for use cases we probably can't even imagine yet.
And this is where the AI story moves beyond just buzzwords. Management made this absolutely staggering disclosure.
Yeah, this was incredible. Over half of the new code base for next-gen VisaNet was built with the assistance of generative AI.
Wait, half the code?
Half the code. For a critical piece of global financial infrastructure, they said it massively improves development speed and security. I mean, this isn't them catching up to Silicon Valley.
This is them setting the pace.
They're setting the pace for how you engineer mission-critical systems, period.
Now, they're connecting everything. Their network of networks now has an estimated 12 billion endpoints.
And that breakdown is perfect, isn't it? 4 billion cards, 4 billion bank accounts, and 4 billion digital wallets.
It's redundancy and reach.
Total redundancy. Wherever money needs to go, Visa has a digitally connected node to route it through. That's what lets them launch all these new services.
Which brings us to the future of how we buy things. Agentic commerce.
The third wave, as they called it, after e-commerce and mobile commerce.
So this is AI agents buying and selling on our behalf. And Visa wants to set the standards.
And if you think about it, that makes perfect sense. Agentic commerce needs trust. It needs verification and security more than anything.
Right.
Which is why they released the Visa Trusted Agent Protocol. It's a framework to help merchants figure out if a checkout request is from a legitimate AI agent or, a malicious bot trying to commit fraud.
So they're building the trust layer for this new world.
And they're making it easy to adopt. That's the key.
And tokenization is the critical building block for that entire security layer. The growth rate here is, I think, the most impressive number on the whole call.
It's unbelievable. Visa now has over 16 billion Visa tokens.
16 billion.
Up from 10 billion just in May of 2024.
So that's 6 billion new tokens in just a few months.
The acceleration is just phenomenal. And by positioning this as the foundation for secure agentic commerce, their goal of 100% tokenized e-commerce doesn't seem like a dream anymore.
No, it sounds like an achievable target for the next few years.
They are building the secure digital highway for AI-driven spending.
Okay, moving from AI agents to digital assets.
Right.
Stock stablecoins. Management sees this as a huge opportunity, not a threat.
Which is a powerful signal to the rest of the financial world. And the momentum is real. Visa now has over 130 stablecoin-linked card programs in more than 40 countries.
And the spend is growing fast.
In Q4 alone, stablecoin-linked Visa card spend quadrupled year over year. That is just explosive.
So where's the real application here? It's in cross-border, right? The volume is now at a $2.5 billion annualized run rate.
Exactly. And they're piloting a stablecoin pre-funding option for Visa Direct.
Okay, break that down for us. What does that mean in practice?
It means they're targeting banks and remittance companies. Instead of a bank having to pre-fund a foreign account days in advance with the old slow banking rails, they can use a stablecoin to fund that account almost instantly. It frees up their capital and it drastically reduces risk.
So it's a tangible, high-value use case for crypto in traditional finance.
A very tangible one.
And beyond these really future-forward technologies, they also highlighted some more immediate products. Right. Tell us about Visa Flex and Visa Accept.
So Visa Flex is a single card, a single credential that can tap into multiple funding sources.
Like a credit line and a checking account.
Exactly. Or even a buy now, pay later plan. They've already signed up over 20 clients in 20 countries. It gives their partners a ton of flexibility.
And Visa Accept seems to be focused on financial inclusion.
Totally. It lets small sellers, like a market vendor, accept card payments using just a regular NFC-capable smartphone and a Visa debit card.
It turns every phone into a terminal.
Basically, yes. They're targeting 7 million informal sellers in Sri Lanka alone with this. It's pure expansion of their reach.
And finally, we should just note the upcoming marketing catalysts. Not financial advice, obviously, but a calendar note.
Right. They're already seeing high client engagement for the FIFA World Cup in 2026 and the Winter Olympics in 2026.
And that's not just about branding.
No, it's a massive client engagement driver. It gives them a huge stage to showcase and sell all these new value-added services to their partners. It's an investment that pays off in future contracts.
All right. This has been The Deep Dive, and now it is time for our Not Financial Advice segment.
The part where we pitch an outrageous but plausible trade idea.
Disclaimer noted, we are not your financial advisors.
Okay, so my pitch revolves completely around this explosive potential of agentic commerce. The CEO kept saying this third wave could be additive to the total addressable market.
Additive, meaning it actually grows the pie.
Exactly. AI agents could find and buy things from a more diverse set of sellers, basically growing the whole global pool of spending.
Okay, so the spending volume itself is set to increase.
That's the thesis. So the trade is to go long Visa, ticker V, based on its foundational role in setting the new standards.
The 16 billion tokens, the trusted agent protocol.
All of it. But you pair this with a high conviction, short duration, short position on a slow moving legacy player in the acquiring or processing space.
Okay, why short the legacy players?
Because their volume base is so heavily reliant on old school e-commerce and desktop interfaces, and they've shown, little to no aggressive investment in adopting next-gen VisaNet or these new agentic standards.
So the idea is Visa's tech creates a gap.
A huge gap. The thesis is that Visa's new tech won't just lift all boats. It's going to accelerate the shift of high-margin volume away from the slowest network players. This should result in immediate accelerated volume share gains for Visa. They become the undisputed architect for the future.
That is definitely a high conviction view, built entirely on the tech narrative from the call. So what's the final takeaway? What's the central green flag for Visa's competitive moat from here?
It's the balance. It really is. They are perfectly balancing aggressive capital returns, that 14% dividend hike, the buybacks, with equally aggressive investment into the VAS stack.
So AI, stablecoins, VisaNet modernization.
Everything. They're spending money to defend their core business, grow into adjacent markets, and build the future all at the same time.
Protecting today's revenue while funding that hyperscaler transformation. Speaking of that future, I want to leave you with this provocative thought.
Okay.
Given the incredible level of investment Visa is making into agentic commerce, where AI agents are buying things on your behalf, what do you think will be the biggest vulnerability in this new system? Will the real technical challenge be in preventing sophisticated AI-driven fraud? Or will it be the downstream complexity of resolving disputes when neither the human buyer nor the merchant really knows what the purchasing agent intended to do?
That is a great question to mull over.
Thank you for joining us for this deep dive into Visa's Q4. We hope you feel thoroughly well informed and ready to tackle the future of payments. We'll catch you next time.